Most of the money yesterday made in wheat. Obvious reason. Wheat's the market to trade on this. And the news was that Russia had stated that all ships sailing to the Black Sea or sailing in the Black Sea to Ukrainian ports will be considered potential carriers of military cargo. What this means is basically Russia may well be willing to sink a ship that they believe is carrying military cargo. It closed up the port in the Black Sea. And what does the Ukraine export a huge amount of? Wheat. So we know that wheat's the place to be. What a lot of people have probably not seen, and not a lot, and I'm really pleased that we got the chance to do this, because it's not often I get to say, oh yeah, you can see what happens when a market trades limit up. So let's go and have a little look at what exactly does happen. This is wheat. So I'll get that one going for you. This is wheat as that news comes out. So we're progressing up this move here. Now, in terms of correlation, what you'd be doing then, having read that news, you're thinking, right, if this is a risk scenario, I want to see equity markets falling. I want to see bonds rallying. That would be my indication that people believe that this escalates into something more. But you're not seeing it. Look at what the S&P does. The S&P stays very stable. Bund, which would be the best bond market to trade because the proximity to Russia, to Ukraine, isn't moving either. And in fact, the S&P is actually ticking up with the wheat. So what this is telling you is that, yes, this is a supply issue now. Wheat can't leave the ports in the Black Sea, particularly Odessa. And we now have a situation where risk markets don't care. They're basically saying, this is fine. We're not worried about the impact of this. So now you know that this is purely a wheat and arguably then potentially commodity lock-on play. So that's the way that you're trying to judge these types of correlations. You want wheat. Wheat's moved up from 15. We're now trading up 24, 25. Continues onwards 27. People use a variety of different news feeds. This actually came from Twitter. Twitter's one of the best news feeds out there. There you go. Limit up. So what you'll get when a market trades limit up, you will reach the limit, how far it's allowed to trade. It's allowed to trade there for a while, but it cannot trade beyond that point. So what you'll end up with is a large bid. It will only stop if it locks on that price. If it trades at 30 3/4 for a long enough period of time, around about 5 minutes, then it will lock and then the market will shut and then reopen once liquidity comes back. In this situation, it hasn't locked, and we now start to back off once more. But there you go. That's the limit of how far you can go on this situation. One of the most dangerous things you can do, though, and I know it worked here, is sell the limit. The reason you don't sell the limit is that what can happen is the market can lock, and then it could end up opening with a huge gap up. It arguably could open the next day, limit up, and then you're really in trouble because the next limit up may well be 5, 9+% higher. This was actually tweeted from a Russian news site, hence why it was translated. So, we're watching and trying to translate tweets as they come through at the same time. But what you've got here from a correlation perspective is very clear action in wheat. And the indication from the risk markets is they don't really care. Nothing's going on here. So they're not worried about this. So what you're then looking at is you take the information. So we've got the information. There's your expectation. Wheat should go higher. This is obvious. Supply restriction of wheat trades higher. But what else should happen? Other commodities you would expect to react. Oil does trade higher, marginally. Not much, but it is getting dragged higher. Copper also. The reason I've not put natural gas is because oil and natural gas will correlate reasonably well. I want to see the impact that this has on other commodities as well. So after you see some information, now you want to try and understand, well, how are markets reacting and what should I do if I hear any more of this story? You look at the S&P, nothing happens. The Bund, nothing happens. This is a 1 minute chart, incidentally. The yen, another great barometer of risk, nothing happens. So what this means is now your focus goes solely onto commodity markets, particularly wheat. We know now that this story is sensitive. The markets are going to focus on this story. And until we get a resolution, which arguably could come today, until we get a resolution and an ability of ships to leave the ports in the Black Sea without risk of getting torpedoed by Russia, until that happens, we have a restriction of a restriction of wheat, and the potential then for wheat supplies to further be limited and wheat prices to continue to rise. But now you know which markets you want to be focusing on. You know that your sole focus is one area. And this is where correlation matters. It's not always about saying, well, everything moves together and they all do these perfect things together. Sometimes they don't. And that way you can now eliminate things. You've now made your trading much more streamlined, much more focused, because you've got a framework to judge what's just happened.